So let us start now, I think. And because it's a small group, so we can make it interactive. You can interrupt me at any point of time, whenever you feel like. Fair enough. So to begin with, I will be sharing a presentation so that this makes my job easy. And also for you as well, it will be easier for you. So this is about the myth of investment. Now, why I say it a myth, no? That we are in habit of complicating our life. And the same thing has percolated into the investment behavior also. We intend to always feel that investment is a very difficult subject, and it can be achieved by means of a lot of computation and a lot of planning and all. To my mind, there are few things which is not warranted, and if we can examine that, it will look to be a little easier to us. For example, I'm starting with a 1, and then I will be starting with 1. This is a simple sentence that we all feel. People assume themselves to be a rational and logical investor. And while I am saying this, there's a famous sentence, no? We intend to overestimate our strength and underestimate our weaknesses. It's nothing but it's simple biases. Biases of general life and biases of investment life. Both are almost same. If you want to see the actual behavior of individual in the market, no, how do they look like? No, so whether should we call them a rational or logical? It depends upon this data. You can see this data. This will be actually telling you the behavior of masses, the majority, and the majority understanding. You see SIP numbers, month on month of last 6-7 months I have taken out. This has been taken from NSDL. So data is that way is absolutely correct. Now, month on month, you will see in India, people are registering SIP, something 56 lakhs, 54 lakhs, 50 lakhs, 63. So month on month, around 50, 60 lakhs SIP are getting registered. And of course, lot of them are getting matured, or people are withdrawing, whatever it is. So withdrawal is also around the half of the number that we normally do. Normally, in normal cases, you will find 50% are number which is getting terminated, and out of the total number of registration that we do every month, fresh offers. But when market declines, just look at this. 26th September, market has started declining. October, probably people didn't notice that, but November, people noticed that. Market started declining, your value started coming down. It is a time to actually add units. It's time to buy discounted units. But people started selling this. You can see how many SIP were getting closed. January was a horrible month where 56 lakhs were registered. Not only that we are registering lesser number of SIP, but we are discontinuing much more than that. It's 109% actually the stoppage was in that. So to say that investors are logical and rational is absolutely a wrong conviction. Worldwide, this behavior is not about India. You see the American economy, American capital market investors' behavior and all, everywhere we'll find people make this kind of mistake. Now, how to overcome that? That's a second issue. Let us accept this fact that our behavior in the rising market and in the declining market is something always different. We have a different kind of interpretation for these two tendencies of the market. And so, to say that we are logical and rational, it does not suit to us. One more thing. People say, okay, if you are trading in the market, how do we behave? See, if you are trading in the market, investment is different, trading is different. If you are trading in the market, trading is a zero-sum game. Nobody makes money. If I lose money, you will get the money on my losses. It does not create capital. It is only transferring capital from X to Y or Y to X. The data of NSE BSE says, out of 10 traders, 8 are loser and 2 are the gainer. Where is the rationality? And those 2 are basically institutions. Mostly they are institutions. They are not individual normally. And of course, exceptions are here and there. But understand the total herd mentality is that individual calling themselves to be something that they are logical and rational, they will think universally, they will make a disciplined approach to investment is something unfounded in the capital market till date. Well, I will come to this little later. Second, people also say that you should have a very good expertise to invest in the capital market. When I say capital market, I mean all the things. I mean mutual fund, I mean stock, I mean PMS, I mean AIF, and you have a structured product, which is a little complicated product, not for individual, I should say normally. It can come to you through the route of a mutual fund portfolio also. But all these, I mean to say, you need to have a expertise. This is also another. People say that if you have expertise, then you can invest in the market. There are so simple product in the market, which you invest, you will get the result out of that. You have SIP, you have STP, mutual fund simple product, SIP, STP. Diversification, asset allocations, very simple product. And how much return you can have, I will show it to you. But to have very high-end expertise to invest in capital market, and people spend too much of time. See, you want to become consultant, fair enough. You need to have a lot of knowledge. You need to really have a lot of knowledge. But you want to become investor in the market, just be disciplined, that's all. And even if you have a very high-end understanding of finance, it does not mean that you're going to make money. Understand this. Somebody having very high-end means of finance, I have an example for you. No, the entire capital market is structured around this capital market as CAPM theory or the option pricing of black souls and all. These are the gentlemen, those who got Nobel Prize for the theory that they gave to the world, and we were following those theories. And do you know what happened with them? After giving theory, they felt that if on my theory people are making money, so why not I should come and make money? They were the genius in the finance. All of them got Nobel Prize. And they lost also in the same way the way they got the Nobel Prize. Huge losses. In fact, the loss in LTCM, it's a one product, actually, it's a structured product. In this, the loss was so huge, so big that the Fed of US has to intervene and to come forward to say that somehow this has to be bailed out, it should not spill over to the other organizer. So this is, of course, the extreme side view. But the very simple side view is that if you maintain discipline, there's no need to become very expert in the market. There are simple products which can give you the return that you desire. And I can show you in that, say, somewhere around the end of the program, I will be able to show you that simple products are much better products. If you go into complicated product like AIF, like a structured product, like PMS. PMS is also somewhat almost a very complicated product. It does not guarantee you return higher than the normal product that is offering to you. And second thing is that leave aside product. If somebody assume that if I learn understanding PMS expertise, AIF expertise, and then I will be able to make investment, probably that's a very, very high expectation, very tall order of expectation. People are not able to make money because of the expertise that they have. No, you could be very good in the giving tuition and the gyan, but very difficult to make out money out of that. No, there are enough examples of that. So this is also called. You can interrupt me whenever you feel like. Then this is a very, very, means it's studied, and people accept this sentence as to be very, very sacrosanct. If you take risk, you will have a high return. No. Entire classical finance, if someone of course, most of you are doctor, but if you understand the finance student, no, they will always say in the classical finance, if you take more risk, you will have a higher return, or the return is the function of risk. Entire CAPM theory is based upon that. Entire finance structure is around this sentence. Higher risk means higher return. But of late, it has been proved that if you have optimum risk, you will have a higher return. Optimum risk means the risk should be lesser than what actually you intend to have. Return should be more than what actually you are going to aim for that. Lesser risk, higher return. That's the concept of mutual fund. I will show you. Lesser beta, higher alpha. That is a concept. Means higher risk does not translate to higher return. Now, you will say, if I choose higher risky product, I should get higher return. No, absolutely not. Had this been the case, then I'm using the word like lottery, gambling, cryptos. They offer you highest risk. They offer you highest risk. But do you think people have been able to make money? Lottery, though, you all know, out of, say, if 1 lakh people are buying a ticket, so could be 10, 20, 100 will be making some money out of that. Gambling, so much better thing that you know. Crypto, there were 3,000, 3,500, 4,000 cryptos were issued in different time frame. How many of them are surviving? 8, 10, 10, 12, 15, that's all gone. People have lost money. So higher risk does not translate to higher return. If you want to buy junk bond, just now, before we were starting the program, I just was scanning through and saw interest rate in Turkey is 45%. In Argentina, it is 29%. Don't you think the entire money should have gone to Argentina and Turkey because those are the junk bond? No, it will not go. People know this. Higher risk does not translate to higher return. Similarly with the penny stock, stocks are available at 20 paisa, 30 paisa, 2 rupees, 3 rupees. Does not mean it will become 10 rupees, 20 rupees. No. So this basically is a study which is absolutely studied, accepted, that if you take very, very high end risk, it does not translate to high return. Keep it simple. Those who have been able to discipline, have a trust, have a disciplined approach to the investment, they have been able to make money. Same is the case with the stock market. In Indian stock market, I'm talking about, if you ask for the total number of companies listed in the stock exchange since beginning means what? Bombay Stock Exchange started in 1879. So how many years? 1879, so nearly 21 years, that century, 100 years, 121, another, nearly 190 years, or could be around 100 years. 195 years, no? In last 195 years, there are more than 8,000 stock listed on the stock exchange. 50% disappeared. Where gone? Not available for trade today. So to say that much easier would have been a portfolio. No, I ask this question always. Tell me one single portfolio, and this is of course open to all the audience here. Tell me one portfolio in India which has disappeared. Which has disappeared means you will ask your relationship officer, what is the value of my portfolio? He will say, oh my God, yesterday it became zero. There are enough stock that you can know and you can tell me. In fact, many of you will be holding a stock of like that nature. But portfolio does not disappear. Same, portfolio reduces the risk. Why? By diversification. Simple. No. So higher risk does not translate to high return. If you keep it simple, if you keep it optimum, then actually it translates to high return. I will show you some data on this little last. No? Something more. People are fancy about the stock market. No? The stock market is something where the fluctuation is, volatility is natural. One should be afraid of the direction of market, not the fluctuation, volatility. No, what I mean, if market is going up, everybody will make money. If market is going up, everybody should make money. Volatility does not matter. But if market is declining, then rarely people are able to make money. Even in trading, I'm telling you, people ultimately, 8 people will be losing, 2 people will be gaining. Like that. This is people are scared of volatility. They should have been scared of the direction. So to assume that stock market will always give you high return, because we take the stock market in the wrong direction. It is not about investment, it is about trading. The stock market actually has been treated all alike in the world as a trader. Now, when I say this, you may ask me this question, then how can you prove that? I'm giving you the best company of India. You take out the BSE 30, top 30 stocks. You take out the BSE Nifty 50, top 50 stocks of the country. And you find out what is the proportion of investment by individual in those companies. You will find 5%, 8%, 10%, 12%, 13%. Close. And you find the institutional investment or FIs or promoter investment, it will be running around 75%, 65%, 80%, 85%. Where gone the individual? Now come to the penny stocks, or say low price stock, or stocks which are not so fancy. You will find the individuals would be there 60%, 70%, 55%, 70%. And institutions would be 0%, 1%, 2%. Remaining promoter. Why it has happened? Because we have assumed that the cheaper stock, understanding of stock is very, very, you can say, skewed. People say if it is cheaper, lesser costlier, ordinary prices, let us buy this gives a high return, which is not happening at all. So if you feel that a stock market will always give us high return, it is not happening. Now you want to see that, okay, let me see how the stock market is done over a period of a year. No, I will show you one more slide that will give you understanding on this. This data is basically, you can see this data now. This data is year-wise data of stock market closing number. You can get all this data from BSE. You go to the BSE site, you can download all this data. Year-wise closing number. You can see this year-wise closing number. This is high and low in that year, and this is the PE multiple. Forget PE multiple, not required to be discussed today. High and low is not required to be discussed. Just simple see the closing. You can see from 2000 till 2004, nearly 5-6 years, market remain in the same zone. Same zone. 5,000 to 5,000. Now 5 year, 6 year, people have not waited beyond this. 2, 3 year, 4 year, and if they have found, oh my God, market is not going up, not breaking this 5,000, and they hit at the market. People could not be able to make money in this period. Same if you go a little more. 2007 to 12, almost another 5 year stretch, 13,000 to 17,000, hardly return. Market went up, came down, went up, came down, went up in the same range. It is only if you stay for long, and people holding a stock for so long is only because of ignorance normally. With understanding, you will find hardly a person who understands a stock and then he hold it. Otherwise, there are n number of stock in the market which is called blue chip today, but where motionless in terms of price behavior, price escalation for even 5 years, 7 years, 10 years. No. So people are holding, could be because of ignorance or could be because they were promoter. But investors, basically traders came and went, came and went. Investors never stayed into that. So long periods are there in the stock market where you will find this is happening. Fine. So this also proves to be a little dicey area that the stock market always gives me higher return. There are the person, they are the great name, Nassim, Nicholas Taleb, Krugman and all. They all said that there are millions trained economists in the market. More than million trained economists, means they have been trained to be economists, financial persons. And none of them could able to whisper even about the 2008 crisis, the biggest crisis in the world. Till date, people may have a different opinion around that. But a lot of people feel, and of course, I also subscribe to this opinion, that 2008 was a very, very crucial scam or whatever word you use that happened in the world market. And you understand, so many experts, more than 1 million professors, trained economists, financial persons, none of them could able to whisper this. Later on, Paul Krugman is a Nobel laureate. And he wrote a paper on this, that criticized economist profession were falling to foresee the crisis of 2009 in India. How did economists get it so wrong? So to say that people will have some idea, people will be able to see something out of that, no, it's not happening at all. And for ordinary people, you just forget it. So instead of complicating the thing, if you keep it long, if you keep it simple, then actually you can stay for long. You will have a trust discipline. No, that is possible into that one. People will also have this idea, which in fact I've displayed to you. Stopping SIP in a market downturn is a wise decision. People assume this to be that. Now, if that is what numbers was there, you can see it. In fact, if I show you one step more, if I go back to that screen, I can show you stopping SIP. Who is stopping this? Just see this. SIP is getting stopped when the market declines. This is a proven fact before the numbers are there. Who is not able to convince and who is able to convince? Look at the power of the person. In red, private banks and wealth desk and the direct people, those who invest directly in the market. No, these guys are closing with a ratio of nearly 72-77% in the December. January month data I do not have. December 72%. This would have been much worse in the month of January, because January, so you overshoot the registration number itself. And those who are investing with someone as a consultant, whom he feels that he is going to guide me. So somebody who is controlling his nerve, who is controlling his behavior pattern, so this conversion, this stoppage ratio is still normal. Almost virtually they have been able to control with some deviation here and there. So to say that actually people understand this and all, so stopping SIP in downturn market is wise decision, absolutely not. I can show you one data which actually display, and all of us know this. No, all of us know this, but still for the sake of revision only, I'm just showing it to you, is that when market declines, actually what happens? This is what. Look at this. It's a hypothetical situation that market is declining. Look at this. NAV is coming down, 70, 68, 66, 64, 62. Every month, NAV is coming down. And what I did is that I kept the NAV going down for 24 months, means 2 years. Assume this. And somebody investing 10,000 rupees every month, actually he is suffering a loss. Every month, the losses is increasing. So post 24 month, when he invests 2,40,000 rupees, by now he has lost almost 1 lakh rupees. That's an almost worse situation that people could have thought when the market came down by 50% in 2008 subprime crisis. This happened. I spread it in for 2 years, assume it to happen in 1 year. Your NAV came down from 70 rupees to almost 24 rupees, almost 1/3 NAV. Right now we talk about the small cap, mid cap going down and all. And people are actually stopping big way into small cap, mid cap, because some fund manager also came forward and said some statement on this. And this became so pervasive that people are stopping SIP in across the board. Now, but somebody is continuing SIP still now, though he's able to see the loss. But what he's able to continue is that he finds the NAV going down, so his units allotments are going up. This is the units that is getting allotted. Every time he gets higher allotment. Every time he gets higher allotment. He continued with this faith. And market from 24 just came back to rupees 40 and his losses are over. Nobody can time the market. Yes. You can time in the market. So by the time actually your NAV is 40 rupees, your losses are done with. And by the time you are able to recover your price, means 70 became 70. I am not saying 70 becoming 100. By the time your 70 became 70, your investment of 4,80,000 rupees, 2 years of coming down, 2 years of going up, you are now almost at a gain of 3 lakh rupees. That is about the declining market. The best SIP is actually when your market is declining. You start SIP and market start declining is the best SIP. Statistically proven. There are enough indicators in the market, enough research site and published. But if you ask people whether they are following that, absolutely not. No. A few of us, those who understand this, those who are little alert, I am saying discipline, I am saying patience, I am saying trust, I am saying those who are able to control these behavioral biases, they are able to make money in these downturn. Otherwise, if you ask the masses, the numbers are before you. Oh, so this is also absolutely a wrong notion that is there in the market. Okay, fine. Coming back to next. Past performance guarantee the future return. Now, this is the biggest problem. In fact, the SEBI has given the disclaimer that past performance may or may not be the future performance. That's the one disclaimer. Second, they say investment in mutual fund is subject to market risk. Please read offer document carefully before making investment. So that is second one. Forget the second one. Past performance guarantee the future return. I will show you one of our in-house research that we do, and this will come very handy to you. You just go to this. This will come very handy to you. And this is the research. See the past performance. I'm going with the all fund houses, and I will say, let us say in all the categories in them, and say last 3 year performance. You will find 3 year performance best SBI PSU 28%, and this year performance -4%. This is a nowhere picture. Something like Aditya Birla, this fund in 3 years higher than 26%. This year -12%. Past performance is no guarantee. You will say, okay, let us go sector by sector. I will go into large cap. Let us say large cap 3 years. You will find large cap division. Something like 17% Nippon, now 5% only. Something with 15%, now it has gone to 11%. Something with 15% now gone to 3%. This is the worst one, JM large cap. 12%, it has moved to -3% in this year. Nobody can say that what I purchased in the last year is going to continue. Past performance, you take into any consideration. So if you want to say any other, no, you go into a small cap. A small cap is something very hype now. You look at this. 23%, 20%, 20%, and how this has turned out to be. Even 1% is there, 3% is there, 4%. One thing is going -7%. Quant is there. No, Franklin is there. They were 3%, they were almost in the top quartile, almost top 10 there. They were into top 10, and today they are into minus. So past performance is no indicator. I can show you one more indicator that will give you one more better understanding. This is the decline of NAV from its peak value. This is basically the concept in the stock market, but it tried to bring into into the portfolio also. Just in the past performance. You take all the schemes, go into, let us say, a small cap. Let us go into small cap and see the decline. You'll be surprised. This scheme has got the worst decline, 22% from the highest peak. And if you see the performance of this scheme, this was not so bad in the last 3 years, last 5 years. It has declined so bad. Look at this. No? HSBC, Bank of India, they've declined. This kind of decline is a 22% decline in the small cap. There are a stock, there will be some schemes which has not declined that way. That is possible. But to say that which scheme is going to decline this way, nobody knows this. In fact, the word asset allocation and diversification is in itself an admission by the fund manager that I do not know. See, had they been knowing that this stock is going to do the best performance, they would have simply recommended you, please give me all the money, I will put all the money into one stock, will give you highest return. It's not possible. They do not know. So they actually indirectly say, let us go into diversification portfolio. Not only fund manager says, entire financial industry believes, academician believes, is that diversification is the best way to do the investment. No. So timing the market, picking a stock, these are something, no, it's an elusive concept. This concept actually does not translate into the market. Okay. So coming back to this diversification. So that is why past performance, instead of past performance, pick consistent performance. That is the better word. If you are able to find some consistency in the performance, like performance above benchmark, let us see something like above benchmark. There are enough research in the market that can help you to identify this. Look at this. Let me see risk matrix. There you will be able to find it. I go into, say, large cap and take the default of, say, alpha. I want higher alpha. Look at this higher alpha. This is on 3-year basis, 2.6 alpha, 0.35 alpha, what alpha? And look at the beta, less than 1. Almost every portfolio of Indian mutual funds, almost I'm saying, to the extent of 75, 80%, 85%, they maintain lesser risk. And still they are able to generate higher alpha. No, if I'm into open-ended fund, which category? I'm into large cap. If I go into multi-cap, so you will find a lot more comfort is there. Beta is still less. So lesser risk is still positive return. This is based on 3-year period. Fine. So the thing is that if you feel that if you are going to see the past performance, based upon that you are going to select a portfolio, and based upon that you are going to invest, this does not guarantee you return. Chances that this could be one of the way through which we go into the market to invest in a portfolio. This is one of the way, but this is not the ultimate way, or this is the right way. Consistency or above average return is rather more scientifically proven, is that they will give you better return. Oh, that deals you. To just give this point into focus, yeah, I can show you one more thing. Fund houses also have a tendency to overshoot the return or undershoot the return. Look at this. Fund houses, let us say I take fund house. You know Quant? Everybody knows Quant. No, they have been badly beaten in this. Let us see how Quant schemes are behaving in this downturn market. You will find average return is declining by nearly 20% plus. Average return, it's all equity. Average return is around 20% plus return. Losses in this declining market. And similarly, if you go to see some other little defensive fund houses, among them Bajaj happens to be very distinct. Bajaj happens to be very distinct. If I go into the Bajaj, where is Bajaj? Where is Bajaj? Yeah, it is here. If I go into this, you will find the losses are not so distinct. So fund house-wise features. Fund manager also be different understanding of market. Assume that how can we know this? Nobody will come forward to say that we are going to be very, very aggressive or less aggressive. This is the ticket to success. Absolutely not. You can see over here. Fund house as such is believing we will not go so. In fact, if you see even the bigger fund house like even ICICI, they have gone very, very aggressive, and that is the place where actually they lost out. If you look at the overall scheme decline of this is also, of course, not like Quant, but it is around 17-18%. Could we say 17%? They are 15, 14 also, but little more aggressive than the Bajaj. No, little more aggressive than the Bajaj. So fund house have also. So there are so many metrics, I mean to say, so many metrics. So what is the best metrics from my point of view is that if you find something consistent, fair enough, that's all. Because this year you have a higher return, next year you have a negative return, does not mean to have a overall higher return. No. So that is the one thing that will past performance is no guarantee for the future. One more, this concept is there, myth is there, that if you have a more trade, that means more profit. Now more trade means more tax to government, more personal tax to government, more risk, and more brokerage to the broking firm. That's all. More trade is not. You can say some traders are smart trader. Yeah, of course, some traders are a smart trader. They understand the market pulse. They have a lot of support about the institute. They have a lot of support about the numbers and all. They are mostly institution because they have a research desk. So they are able to generate return. But when you look at the ratio, if there are 8 retail traders in the market, there will be 2 institutional trade in the market. 9:1 or 8:2 is the ratio in the market. These institutions are those who have a support of money, capital, they have a support of risk appetite, they have a support of research. And so they always undo the expectation of these retailers. Trading does not create capital. Investment create capital. Trading is just about zero-sum game. Your loss is my gain. My loss is your gain. So anybody who is able to outsmart you will be able to earn money out of you. And the result is there. You can take out the data. In fact, SEBI is so worried on this that year on year in India, 8 people are losing, 2 people are gaining. 7.5 people are losing, 2.5 people are gaining. They say that if this will be the continued trade practice in the market, in that case, people will lose interest in the trading and they will go away. See, if traders leave the market, liquidity will dry. This market dynamism, it's a very big risk, systematic risk of for institution point of view, from a market point of view. SEBI is so worried on this. And what we are worried about is that let us go and trade. It's not recipe to success. More trade does not mean more profit. More trade means these things. Profit is about a smart trade, support of research and all. And certainly, individuals do not have time, patience, energy, understanding, knowledge, temperament, behavior, biases and all in their favor to make trade income. Stop trading. If you want to do some enjoy purpose, fun purpose and all, leave aside 50,000 rupees, just go and do trade. That's a different. It's not purpose to make money. I have not seen trader becoming rich. I have seen investor becoming rich. You can have a different opinion, can always chip into to say, no, I have a different opinion. Investor means buy and hold a strategy. Trader means buy and sell or sell and buy. You are squaring your position. It's a short-term kind of a contract in the market. So it does not translate into this kind of a capital creation. Correct? Now 2 more and then it will be over. Investing requires constant monitoring. This basically is something, no, when we say constant, that brings a lot of behavioral biases. If I say periodic monitoring, probably that is a lot of disciplined word is there. No, there are 3 words in the dictionary of behavioral finance: trust, discipline, and patience. If you have these 3, you are much strong investor, much better investor. But if you lack trust, discipline, and patience, you become a weaker investor. You are emotionally such charged. So constant monitoring leads to these kind of weaknesses. If you have a regular, if you say periodic monitoring, let's say every 6 months, fair enough. But if you say constant monitoring, then emotion will take over in you. Market coming down, oh my God, let us withdraw. Instead of that, people should use the preferred vehicle. Those who have used like SIP, STP, SWP, diversified investment portfolio, financial planning, goal planning. Goal planning is such an extraordinary situation. I will show you just 1 or 2. Fixed asset allocation, asset rebalancing. You know, whenever mutual fund program, sometime, some other day, whenever it happens, or it must have happened earlier, you will find these terms explained in such a beautiful word that portfolio will give you so much of strength on account of these 3-4 things, which in fact, we are not going to pay extra to achieve this. This is an automatic function into portfolio. But if we do constant monitoring, this goes away. For example, I will show you something like goal planning. 2-3 goal planning, this will give you understanding on this. Look at this. I'm going into, say, goal planning. Let us say somebody says that I want to make my retirement planning. Very simple. Today, somebody the age of, say, 25 years, young age, could be our children, going to retire at 60 years. And because it's a group of a doctor, so I will put the life expectancy to 100 years. Doctors are there, they will take care of for next 40 years here. After retirement, next 40 years. No. Currently, this monthly expense leads, suppose he is able to spend some nearly 50,000, good amount of money. At least in Indian conditions, per month 50,000 rupees of expense is reasonable good, quite good. You can manage it also, no issue. And you want to create a portfolio which will take care of wealth accumulation from 25 to 60 years of age at a rate of 12%, let us say 12%. And you want to withdraw your portfolio at the age of 60 to 100 years at a rate of say 8%. Inflation is say 4%. The scenario, what is this? If you submit this and you find this, to maintain the lifestyle of this 50,000 rupees at inflation of 4%, from 25 to 60, means after 35 years, you require per month expense of nearly 2 lakh rupees. And to have this 2 lakh rupees per month inflation adjusted for next 40 years, you need to have a 2 crore 83 lakh rupees at the age of 60. And if you want to create this kind of money for you, you require this SIP of 4,500 rupees. That's all. That's a goal planning. I'm talking about retirement. Now, many of you will say, oh, this is your 25 year. I'm already 45. Oh, there are many tools. There are many tools in the market which you can go and see. Goal planning or planning, goal-based planning, based upon that, creating a portfolio that gives you a lot of advantage that you stay for long, discipline, trust, and conviction comes into that. Let us say pre-retirement SWP. Your age is 45. Yes, my age is 45. Retiring when? Retiring at 60. A current SIP, how much I am committing? I am committing 25,000 rupees SIP. I am in a mid-career and I can now spare some good amount of money to invest into that. Any lump sum amount that you have spared for investment, how much money you have for retirement? I have something around, say, lump sum amount in, let us say, 15 lakh rupees. That's not much, no problem. Investment growth rate of portfolio is 12%, and I will be withdrawing at the rate of, say, 8% after 60 till the age of Ananta. No, I have not put 100 years. Every month you will withdraw. How much amount? 25,000 rupees of SIP, 15 lakh rupees of my lump sum amount, and this goes into, you will create at the time of retirement 2 crore 14 lakh rupees, and per month withdrawal after 60 becomes 1 lakh 43. That's a mathematics, simple mathematics. I mean to say that if you are going to prepare your investment in this manner, which is called, there are so many goals in our life. No, you identify the goal, assign amount, and then you do regular, or you can say periodic monitoring. That's all. It will take care of that. In India, since 1979 at least, the portfolio of Sensex has given return of nearly 17%. 15% return and 2.5% dividend. So you have a 17% return. And tell me how many individuals you know that they have been able to get this return from the pocket? Absolutely. No, people are not getting the return which is due to them, which is being offered to them by the market. Why? Constant monitoring. So that's again a very big myth. No, this is the last one. You need to time the market to succeed. No, like market is coming down, people say, let me wait. It will come to 72,000 and then I will start investing. Oh my God. When it came to 72,000, then you said, let it go to 68,000. Somebody has said it will touch 68,000 rupees. Or 68. When it touches 68,000, somebody comes and says, oh, no. 65 is the next line. From there, it will have a W type or say V type of something like that is there. No. And you just keep waiting. When market bounce back, it bounce back so swiftly that you just keep waiting out of that. You have a regret notion also. I wanted to invest at 68,000. Market has now gone back to 69. Until it comes back to 68,000, I will not invest. Simple understanding of market is like this only. So whenever we say that we are timing the market, we are losing the opportunity. Timing the market is a trading concept. Time in the market is an investment concept. Identify yourself, whether you're a trader or you're an investor. If you're a trader, it is not about wealth creation. Trader is all about you are able to have a ability to outsmart others, take gain out of their losses. That is the trading temperament, trading mentality. If you have this, you should do it. If you do not have, you should still do this so that you can lose money, others will get money out of that. But investment is time in the market, portfolio, diversification, asset allocation, simple product. This only will create capital. This only will see the capital going up. And there only you will be able to make money. So simple. No. So these are the 10 myths I brought to you. And stopping this sharing, coming to the forum. Yeah, 40 minutes. Perfect. I started at 8 o'clock, then 40 minutes. So if you have any query, please feel free to ask me if you have any query. Or else you can chip in with your idea also, because many of you are quite matured and a lot of experience are there. I have listened to you earlier as well. So you can, of course, chip in with your ideas that if you have.
Thank you, Sanat sir, for a lovely presentation. I was there only for 5 minutes, but last few words were really great.
Get.
सर गुड इवनिंग।
Yeah, good evening, sir.
आप बता रहे थे ना कि इन्वेस्टमेंट लोग नहीं करते हैं, राइट, और ट्रेडिंग करते हैं। उसका बेस्ट उदाहरण है कि आज के अपने ट्रेडिंग में देख लीजिए कितने लोग हैं, हार्डली 10 पीपल। और पिछले बार जब क्रिप्टो का था उसमें कम से कम 30 लोग थे। तो यही बताता है कि लोग ट्रेडिंग में ज्यादा इंटरेस्टेड है, इन्वेस्टमेंट में नहीं। इससे बढ़िया एग्जांपल और क्या हो सकता है, बोलिए।
वो बोलते हैं ना, सिंगल माल्ट में ज्यादा स्वाद मिलता है लोगों को और शरबत में जूस में नहीं मिलता है।
Sir, topic instead of 10 minutes, it should have been how to make 10 crores in 10 days. तो देखिए कितने लोग आते हैं।
एग्जैक्टली सही बोल रहे हैं।
In fact, to my understanding, that people have not been able to make money and they have become rich. People have become rich nowadays. If you see, good professional, good income, good savings has transferred to a good wealth. That has been mostly happening. And side income is probably investment. Out of investment, people could have made a huge sum, huge fortune, but people have not taken advantage of that. That is the, say, one very weak outcome, but that is the fact. That is what I understand.
और एक ऑब्जर्वेशन ये है ना सर कि आजकल लोग आर हैविंग दैट ऑल इज वेल कंसेप्ट, मतलब सब कुछ ठीक है, सब स्टॉप लॉस हिट हो गया होगा ट्रेडर्स का, दे आर स्टिल होल्डिंग ऑन डियरली टू द थिंग्स and they are just saying that all is well, no strategy, nothing. That is the issue which has happened to many of the investors.
तो यही होता है ना कि अगर उनका वो स्टॉप लॉस हिट हो जाता है, वो उठा लेते हैं, तो वो ट्रेडर्स और क्या करते हैं ना कि वो फिर मजबूरी में वो इन्वेस्टर बन जाते हैं फिर।
See, I will tell you one thing. Yeah, something Dr. was saying.
Yes, I was saying even the discussions we can understand ki stop loss was a concept 8 years before. Now people are using advanced tools of risk management. One is the insurance in trade. Every trade they are taking insurance instead of putting a stop loss. So it just shows the awareness. Actually, investment is a very easy thing, as Mr. Samant presented. Every person can do, means to say either is a housewife, either is a newcomer, a person who has no education of economy, any person can do. So for investment, there is no need of any education. Instead, only you have to do and don'ts. What Mr. Saman told, of course, it's a good thing. But the problem is that trading people are trying to learn from non-professional people. Why? Because trading is not available in any education school. It is not taught in colleges. It is not taught in universities. But if you ask if really trading makes money, just this is the reason I want to do one presentation of the trading part, because people have not even tasted that. People even used to say, if you inquire 1 million, they will give you the reference of those people who are just trying and learning. Real traders you will find in few places also in the world. Now few people are available in India. Don't know when I was there, but there are so many traders available in Dubai there who are just living trading income. So this part can be shown in many ways. It can be shown by showing real trading history of traders, third party accounts verified, 10 years history. Like means to say, I know many traders who has no income instead of trading. Their children has become traders, their grandfather was traders. So it's a complete different profession. But few those people which are in trader, they are tier 1 trader is in banking terminology. Tier 1 trader, they are not trading any online like stock market, like what you have seen in India and CFD trading. Tier 1 trader is a different kind of trader who are trading oils directly with banks, where the concept is totally different. Means to say there is no online trading. That is real trading. And tier 2 trader is something which we are always discussing. Our discussions, when we say stop loss, when we say intraday trading, they are all called tier 2 traders. So if you will Google this terminology like tier 1 trader of banks, you will understand what is the concept in that one. Insurance is something which has come since 8 years, which made tier 1 pretty safe. Maybe you will, if try to Google fit terminologies like LCBLC, that is the credit given by the banks to these tier 1 traders. So this is very commonly done by all private banks, HSBC, Standard Chartered Bank, this city banks. So they are giving credit line for tier 1 traders. So just is to say, I like the presentation Mr. Sanat Bharadwaj did, because this is really good for common people. But one part is that it is always underestimated that intraday trading, people are trying, but better not to try if you are not getting a proper education. And it is almost very difficult to find such kind of education.
Yeah.
So the problem is many are from a different professional background. Now, if one is a physician and if the patient comes with Google answers, imagine the state of the physician treating such patients. This is exactly what has happened to the investors all over. They assume that they will watch some YouTube videos, some information here and there, be a part of Telegram group, WhatsApp group, attend some trading courses. Some have even spent lakhs of attending these trading courses and zero benefit to them in a long run. So one needs to decide that what is our profession. Now there are traders who have made it the profession good for them because they're full time into it. They can dedicate every second, extra second they have in their life for this profession, just like how a halwai does or a physician does. But what has happened is physicians, engineers, any other professionals are also just assuming that trading is child's play, and they end up playing with their hard-earned money. It is good for long-term investors. They have to lose so for someone to gain. So they help the long-term investors in the long run.
Dr. Deepak, actually, no, traders, they are hardly trading 2-3 trades in a month. I don't
How
think
many,
they are.
sir? How many? They are just a handful of people, sir. What are the vast
Yes,
majority?
correct,
If you look
absolutely
at the
correct.
SEBI, if you look at the SEBI statistics or any Fidelity group is there, if you look at the statistics, 95% of the traders fail. So
It's
the
a
vast
Indian data,
percentage is,
Dr. Deepak. The CB
yeah,
data is a
even
pure Indian.
even US data. Sir, we are all Indians. Sir. We are all Indians.
No, me to say we are Indians, but Indians are all over the world. This CB data is particularly for related to an NSE and BSE stock exchange. But real trading is being
Sir,
done in
you can go
banks.
through the Fidelity. Fidelity is a website. It is a US based website. You can go through their data also, which shows the US trends also, because US is well advanced technology wise and the exposure also.
No,
So
I want to add here two things here. See, understand. Trading is not about somebody making money. Trading is about somebody making money at the loss of someone else. So good trader and bad trader. It's a competition between two trader. One who is smart will be able to make money out of the loss of the others. This is the concept of trading. If there are two good trader, one will make money. If there are 10 good trader, two will make money, three will make money. But it's not so in investment. Investment, there are a scheme, suppose, of any AMC, which has got, say, a AUM of, say, around 1 lakh crore rupees. There would be, say, nearly 3 lakh invested into that. So all of them are able to generate this return of, say, 15% CAGR for last 10, 15 years. The difference between trading is investment is like this. Trading cannot be construed to be that if I learn and understand, then I will make money. See, if you learn and understood, and if I learn more and more understood than you, I will make money at your loss. That is a trading.
One more thing I would like to add, because we have been trying to put a straight jacket to trading and investment, but here behavioral economics also come. बट इन ट्रेडिंग क्या होता है कि मैं पैसे खो रहा हूँ, मैं जो कर रहा हूँ वो कर रहा हूँ, तो वो मेरा जो भी कर रहा हूँ वो सही कर रहा हूँ, दैट कम्स इनटू प्ले। और इन्वेस्टमेंट में होता है कि तुम मेरे पैसे तुम और कोई मैनेज कर रहा है, तो वो थोड़ा बर्दाश्त नहीं होता है। तो ये दोनों चीज। और एक होता है कि ट्रेडिंग में अपने को इंस्टेंट बेनिफिट दिखता है, यहाँ पर जो लोगों को दिखता है कि मैं बना लूंगा, लेकिन जो कि इंस्टेंट लॉस भी हो जाता है। तो और वहां पर म्यूचुअल फंड में क्या था कि ठीक है, वो जब होगा तब होगा, अगर नया भी बढ़ता है तो 1 पैसे 2 पैसे 3 पैसे। और यहाँ पर शेयर्स में या स्टॉक्स में अपने को एक साथ 5% 10% दिखाई देता है। तो ये दोनों चीज भी लोगों के बिहेवियर पर, मेंटालिटी पर फर्क डालती है और ट्रेडिंग और इन्वेस्टमेंट को डिफरेंशिएट करती है, मेरे को ये लगता है।
So the interesting story on this, immediate gratification and delayed gratification. Doctors are here, they will understood much more than this. एक छोटे बच्चे को आप अभी एक टॉफी दे दें, 2 टॉफी, वो फटाक से लेके खा लेंगे, और उनको ये बोलिए कि अगले महीने आकर के तुमको 10 टॉफी देंगे, वो बोलेगा अगले महीने मत आओ अंकल, देना है तो दे दो अभी, नहीं तो अगले महीने मत आओ।
सही बोल रहे हो।
ग्रेटिफिकेशन, we have been नहीं, so we have been designed like that. हमारी
trading, this intraday trading has so much affiliation, so much people are involved. Just it is because gambling genes, men have gambling genes, they like this speculation, they like to play. Of course, long-term investment is something which should be always advised, but just means to say one part truth is also there. There are traders who are really living in this profession, but they are not gambling with their monies. They are professional people. This is one good part also.
See, even if there are 10 professional traders, only 5 will make money. 5 have to lose the money.
A real definition of a trader means he is going to make money consistently, although few of his trades will be lost. That is the real definition. Means to say out of 100 trades, his 35-40 trades will be wrong, but still always his account will be up, because their bread and butter is the same profession. Other thing is that their valuation is very high in the market. Means to say their salaries are very high. This is another fact. They are being hired by big banks, and their salaries part is very high. So this is a very good part in them. They are very good risk management people. They know how to control their emotions. This is thing. But I know this thing ki hardly people have seen them to these people who are real traders.
सर ऐसा हो सकता है क्या, मतलब अभी रवि सर ने जो बोला है उससे मेरे दिमाग में आया कि इंसान के अंदर वो गैम्बलिंग जीन्स होती है। तो क्या अपने लोग ऐसे कर सकते हैं कि म्यूचुअल फंड डिस्ट्रीब्यूटर किसी डॉक्टर के साथ टाई अप करे और उसके बाद ये बोले कि ठीक है आप ये वाला पोर्टफोलियो लीजिए प्लस ये एक गोली लीजिए, जिससे वो गैम्बलिंग वाली जीन्स सबड्यूड हो जाएगी? ये हो सकता है क्या कुछ ऐसा? नया आइडिया है।
Then great.
Hello, good evening, Sanat ji.
Yeah, good evening, sir.
This is Anant here. From your presentation, you were mentioning 3 strategy in SIP, that is SWP, STP, and SIP.
Yes.
So, if you can elaborate a bit on this STP and SWP, it would be a little bit beneficial.
Okay. See, the 3 words, basically the acronym of 3 SIP is acronym of Systematic Investment Plan. Means you are investing regularly, periodically, systematically, at a regular interval, every month 5,000 rupees, every 2 months 10,000 rupees, something like that. A periodicity will bring a discipline. So normally this is basically to just get over to this idea is that I will be able to time the market effectively, or I may not have all the money at one point of time. Every month I get a salary. So please make a disciplined approach of investment slowly, month on month. That is regular investment. Periodic investment is called SIP, 5,000, 10,000, 20,000, like that, whatever you do in the per month. Now, STP is little improved version of this SIP. Suppose at this point of time, I got from somewhere 5 lakh rupees. Now I have a two choice. Either I put all the 5 lakh rupees in one go in any schemes of a mutual fund. That's one possibility. Second is that I decide, no, I will be investing every month in the scheme. That is the second possibility. Now, if I put all the 5 lakh rupees in one go in a scheme, that will always have a risk. If market declines, all my money will be losing an opportunity of further investment. No, losing an opportunity, because if market is volatile, it can come down, go up, come down, go up. So had the money been there with me, then I would have invested here also. Something like, you can say, timing the market. How to do this automatic function is that put 5 lakh rupees into mutual fund debt schemes. They will give you 6, 7%, 8%. Not more than that, not less than that. And from there, you transfer every month on month again in the equity scheme. So the difference between SIP and STP, systematic investment plan, money transfer from banks month on month to the schemes of mutual fund. In STP, the money transfer from the debt schemes of mutual fund to the equity schemes of mutual fund. Again, month on month. So lump sum amount of money, we normally say, put the money into liquidity scheme, debt schemes of mutual fund, earn regular return of say 7-8% there. It's almost, you can say, very bare minimum risk is there, and transfer slowly so that you are able to average out the investment volatility of equity. That's the STP, systematic transfer plan. Now you invested over a period of say 3 year, 10 year, 20 year, 30 year, and then money became huge when you became 60 year. Now at 60 year, what should you do? You have to consume the money. At the end of the day, you have to use the money. So how to use that? Month on month, you will withdraw. So systematic withdrawal plan is basically coined for this acronym, that you are withdrawing every month. It's like we are trying to replace our salary with this word. So this SWP is a monthly withdrawal plan, similar to what you must have heard, something called annuity. Anybody who has got a background of insurance, they will use always a word called annuity. Annuity is nothing but insurance. Annuity is nothing but the SWP of mutual fund, systematic withdrawal plan of mutual fund. Or you can say, if you have a recurring deposit from post office and bank, and you have say withdrawal from the bank month on month, monthly income schemes of a bank and post office. So they also have a withdrawal facility month on month. So SWP is about withdrawal of money month on month, and SIP is about investment month on month from bank to mutual fund. STP is from the schemes of debt mutual fund to the equity scheme. So it's basically deal with the big amount of money. So this is the three things, and that in fact give you complete coverage of entire portfolio management, entire portfolio understanding. This three takes care of almost. I have seen people making money through these simple three. You know, till 60 you keep adding, after 60 you keep withdrawing. That's all. Like
Okay. Thank you very much. Thank you.
Thank you, sir.
You can improvise the STP by one more method, like as Sanatji told, that you can put your instruction as the fixed amount of money on the fixed day will be transferred into the scheme. In case your money is putting into debt fund or liquid fund, you can also withdraw a lump sum amount and put into the equity fund in case the market is huge down. So there again the timing factor comes into the play, which generally we discourage. But yes, we can do that also. Apart from doing systematic STP, we can also withdraw a lump sum amount and we can put into the equity scheme also.
There's a word for trigger. Word is trigger for that. So you can trigger the conditions. If you meet certain return objectives, certain kind of percentage return or absolute amount return, then you can give a trigger instruction to the AMC that they can do transaction on behalf of you. That is what you are referring to, sir.
Sanat sir, small
Yes,
doubt. So if we are planning for STP, both the liquid fund and the equity fund has to belong to the same fund house, right?
Yeah,
Yes.
till date, so mutual fund has not offered you this facility that you can do inter AMC transaction. Till date.
Okay.
But going forward, recently we had one, I will say brief happening in the market is that MFU, probably along with that CAMS Carby will be able to come up with this solution also, is where we are able to do this inter AMC, this transfer. But on some platform, this is happening where it happens, but it is happened through a process that they have designed, not by the industry that they have offered you. So till date, you accept it is not to be across AMC, but going forward, this is also going to be the reality.
Sanat sir, one doubt
Thank
on
you,
the
sir.
SWP. Sir, you said 1%, sir. Like after 6 years, if you want to withdraw 5% or some 6%, you withdraw is something you said, sir. Sir, can you explain that that percentage? How much should be the ideal percent which we need to withdraw, or so that our capital is still growing in a smaller way, but we also get money for our like monthly expenses when we retire, because we are replacing that with salary. That's what you said.
Yeah, I understood this. See, I will show you this. You can see.
Manoj sir, lot of
Yes, sir.
background noise from you.
Not from my
हाँ,
side. It
नहीं
must
नहीं
not be there
मनोज
because
मनोज
I'm
सर,
sitting alone.
हाँ नहीं, आप नहीं सर.
I'm sitting alone. हमारे तो घर के नजदीक में 100 मीटर तक कोई घर ही नहीं है.
कोई कोई शोर मचाने वाला भी नहीं है.
So you see, the withdrawal rate should be, what should be the withdrawal rate? No, it should be less than the earning rate. So for example, if I say, if I do this, this will do this. If you say that my current age, say let us say 25 year, I am accumulating till the age of 60 through SIP, and I am living till the life of 100 year, so the doctors around. And per month, my expenses are 50,000 rupees. So this is the accumulation phase. So from 25 to 60, we assume that we will earn 12%. You can say, why 12%? Let us say 11% only. Possible. This is something that we do not know, but we plan. That is what. Now, you can earn more than that. You can earn 12%, you can earn 13%. So no problem. A maturity amount at the age of 60 will be much more than what we are anticipating with the 11% rate. So this area is something, is a gray area that we do not know. We assume that is going to happen. So we should be a little more conservative here. Now, post-retirement, you can say, today I am say 25 years, 35 years from now will be something like 2060, 2065, 70 and all. Then what will be the interest rate? And you say interest rate at that point of time will be only 6%. So 6%. So this planning is something that we do not know. See, planning is here where we do not know these numbers. So we make anticipation. In fact, we do not know also what will be the inflation in this course of our journey. People will say 5%, somebody will say 4%, let us say put 3%. So these three numbers now that we are showing is something that we speculate. Now, while we are speculating, we should take care. Only financial expert know, they will say that make little conservative speculation. If somebody is saying that India will grow at a rate of say 6% real rate of return, 4% inflation, so nominal 6 plus 4, 10%, scheme will outperform economy, so 12%, and then you will be having very good fund manager, so 12 plus another 1%, 13%. So I will go by 11%, I will go by 10%. This basically is to just ensure that I am able to get this money. Now I am withdrawing at the rate of 6% here. Post-retirement, I am going to withdraw at 6%. Assuming that my corpus that is going to become 255 crore actually is going to deliver me 140 lakh rupees per month, and that will take care of my retirement amount of money. So this is where this 140 is something you are getting out of this 6% withdrawal. Now you can say this 140 is not sufficient for me. So in that case, so you will have to have little more of investment. Why 50,000 rupees? You should go for 65,000 rupees. Why? Because you will say, given this 65,000 rupees of investment, my investment value will become 3 crore 32 lakh rupees with 11% return, and even 6% withdrawal will take care of my 1,82,000 rupees. So how much should be the withdrawal depends upon is your requirement at this point of time. Number one. Number two, you should not withdraw more than the rate at which this amount is growing. This amount is growing at a rate of 6%, which is you are withdrawing. So if rate is 7%, withdraw 6%. Rate is 6%, withdraw 5.5%, so that this money should remain with us. Now, in some situation, people say, what is the use of this money post the life? Children, we will give children 1 crore rupees. So if you want something like that, no, I will show you one thing. Now you can, I can do that in Excel to show you. This will be very handy. It will be very easy also. Just a second. I will show it to you. Because
हर्षा सर, जब तक सनत भाई अपना ये प्रेजेंटेशन खोल रहे हैं, मैं एक बात और ऐड कर रहा हूँ।
हाँ सर।
कि अगर सपोज आप एक अच्छा कॉर्पस बना लिए हैं और अपने ये देख रहे हैं कि मेरे को हर महीने सपोज एक एक्स अमाउंट, सपोज लाख रुपए चाहिए, और अपने ये तो नहीं सोच सकते ना कि ठीक अपने अगर लाख रुपए निकालेंगे तो अपनी जो बैलेंस पैसा है वो ग्रो करेगा, क्योंकि अभी जरूरत क्या है, फर्स्ट थिंग फर्स्ट में ये है कि अपने को अभी 1 लाख रुपए चाहिए है। तो अपने तो सबसे पहले ये देखेंगे ना कि मेरा भी जो कॉर्पस मैंने 20 साल 25 साल 30 साल तक मैंने जो कॉर्पस जमा किया और मेरा बेसिक रिक्वायरमेंट 1 लाख है, तो अपने लोग उसको तो मीट करेंगे ही करेंगे। उसके बाद वो सेकेंडरी हो जाता है कि ठीक है जो बचा हुआ कॉर्पस है वो ग्रो कर रहा है कि नहीं ग्रो कर रहा है। तो मेरा मानना ये है कि अपनी बेसिक जरूरतें अगर पूरी होती है तो मेरे ख्याल से आवर ऑब्जेक्टिव इज मेट। और सनत सर अभी कुछ ऐड कर रहा है।
ओके,
ये काफी क्लियर कर देगा जो सर अभी पूछ रहे थे। ये सिचुएशन एक्सेल में है तो आई कैन कस्टमाइज दिस वेरी सिंपल। 25 साल का आदमी 60 ईयर में ही इज प्लानिंग टू रिटायर, 100 ईयर तक उनको जिंदगी जीनी है। ही इज एबल टू spend today 50,000 rupees at this point of time, 50,000 रुपया। So
सर वहां पे एक क्वेश्चन है, टोटल मंथली एक्सपेंसेस इज इक्वल टू एसआईपी अमाउंट और हमारा खर्चा है वो?
आपका खर्चा है।
ओके, एक्सपेंसेस हमारा डे टू डे एक्सपेंसेस, मंथली एक्सपेंसेस है। ओके,
दिस वी हैव टू मीट एट द एज ऑफ 60। अपने को प्लानिंग यही करने की हमारा लाइफ स्टाइल मेंटेन रहे।
राइट।
ओके, 50,000 रुपये में हम महंगाई की दर अभी चूंकि भविष्य का समय है तो 4% ही लेके चलते हैं, तो वी नीड टू हैव ए नियरली 2 लाख रुपीज पर मंथ फ्रॉम 60 to 100 ईयर ऑफ द एज। इतना चाहिए पर मंथ। अच्छा, अब ये पैसा आने के लिए आपने यहां से यहां जो इन्वेस्टमेंट की 50,000 रुपया, ये इन्वेस्टमेंट करना नहीं है, ये तो खर्च है। कितना इन्वेस्टमेंट करेंगे आएंगे, बट ये ग्रो करनी चाहिए 12% से, तब इतना होगा। और महंगाई यहां भी 4% रख दिया हमने, तो 4% रख दिया हमने यहाँ पे, तो आपको इस पीरियड में 2 लाख तो मिल रही है। आपने बच्चों के लिए कुछ नहीं छोड़ा, जीरो अमाउंट। एट द एज ऑफ 100 हमने क्या किया कि जो 2,83,00,000 रुपया है, इसमें से हम विड्रॉल शुरू कर दिए 8% से, और विड्रॉ होते जा रहा है, तो पूरा पैसा खत्म हो जाएगा 100 ईयर में। हमने कहा नहीं, बच्चों के लिए 1 करोड़ छोड़ देते हैं। तब ऐसा होने से हमें यहाँ पे 2,87,00,000 चाहिए, और ये चाहिए तो इतना इन्वेस्ट करेंगे। कुछ नहीं चाहिए अपने को उस समय में, तो फिर इतना से ही काम चल जाएगा। डज नॉट मेक मच ऑफ डिफरेंस, क्योंकि लंबा स्पैन है, 40 ईयर स्पैन है, तो ज्यादा फर्क नहीं पड़ता है। बच्चों के लिए 1 करोड़ छोड़ दिया हमने, तो इट्स ऑल मैथमेटिक्स। इतना ही है कि हम कितना अपने लाइफ स्टाइल को मेंटेन करने के लिए कितना पैसा चाहिए एट द एज ऑफ 60, और वो पूरा करने के लिए हमें आज कितना इन्वेस्टमेंट करना है जो 12% से ग्रो करेगा।
ओके सर, ओके, या।
तो यहाँ पे ये चीज अपने क्लियर नहीं करते हैं कि कितना करनी चाहिए। दैट डिपेंड्स अपॉन द पर्सन। लाइक एक टूल है उस तरह का, दिस टूल, या फ्यूचर कॉस्ट। अभी किसी आदमी को आज से 25 साल बाद की प्लानिंग करनी हो, आज का खर्चा उसका 75,000 रुपीज का हो, 4% की महंगाई है, तो कुछ भी प्लानिंग करनी है उसको इतना तो लाइफ में अर्निंग करना पड़ेगा, 2 लाख रुपया उस समय के बाद।
ओके,
अब इसकी प्लानिंग करने के लिए हमें कितना का एसआईपी करना है, फिर कितना ये अमाउंट इतना बड़ा हो कि वो विड्रॉल 2 लाख हो जाए कम से कम।
या, ओके सर।
सो ये एक्सपेंस साइड पहले देखते हैं हम लोग, और उसके बाद उस हिसाब से जैसा पोर्टफोलियो बन गया उस हिसाब से उतना पैसा का एसआईपी करवा।
ओके सर, दिस वाज वेरी क्लियर। या, गॉट योर पॉइंट सर। थैंक यू सो मच सर। थैंक यू मनोज सर।
Thank you so much. I think done. I think no more questions are there. No?
Nothing from my side at least.
सर लास्ट में जाते जाते एक चीज बता दीजिए, कौन से स्कीम में इन्वेस्ट करना चाहिए?
कौन सी स्कीम? पर्सनली आप हमसे पूछे तो आपने कहा किया तो उससे काफी क्लैरिटी हो जाएगी। हमने जब स्कीम का सिलेक्शन करना था, आई एम वेरी कंप्यूटर इलिटरेट पर्सन, है ना। पुराने समय वाले कंप्यूटर कम से कम चीज करते थे, जिसने हमको कंप्यूटर में इन्वेस्टमेंट करना सिखाए ICICI में, हमने सारे पैसे वही डाल दिए और वो चल रहा है। इट इज गिविंग मी वेरी हैंडी एंड वेरी गुड रिटर्न। तो इट्स अबाउट कॉन्फिडेंस इन द सिस्टम एंड कन्वीनियंस इन इन्वेस्टमेंट। यदि ये चीज कहीं पे स्लिप हो गया तो आई थिंक दैट इज बहुत रिस्क लेने का दरकार नहीं है। इफ somebody is giving you higher return, तो you must question that. For example, I will give you an example. 2012, 2013, 2014 का समय था जब कुछ डेट फंड दे रहे थे रिटर्न 12%, 11%। मैं नाम टेम्पल्टन थे, UTI थी, निपॉन था, रिलायंस उसका नाम था। They were giving 12% return. People were happy. How come you can be happy? क्वेश्चन करनी थी, नहीं किया क्वेश्चन। 2015 में पैसे भी गए, अच्छे पैसे लोगों ने नुकसान। सो एनीथिंग अननेचुरल इज ऑलवेज टू बी सस्पेक्टेड। System driven, regular continuous is you will certainly make money. 1% more or less nobody knows. तो लगातार इन्वेस्टमेंट करें 25-30 साल के लिए, 5,000 ही सही, 2,000 ही सही, 10,000 ही सही, 50,000 ही सही, दैट इज योर कैपेसिटी. पैसा तब बच जाता है, नहीं तो पैसा नहीं.
एक सनत बहुत एक चीज मेरे को और बताओ कि आज से करीब करीब 6-7 साल पहले की बात है, जब एडेलवेस ये ऑफर करता था कि अगर मार्केट सपोज इतना % गिरा तो मेरा एसटीपी में ये अमाउंट वहां से शिफ्ट हो जाएगा ऑटोमेटिक, जिसको ट्रिगर बोलते हैं. आज की तारीख में ऐसा कुछ दिखाई नहीं दे रहा. किसी फंड हाउस में है क्या ऐसा?
नहीं, ट्रिगर आई थिंक सारे बड़े फंड हाउस में है, बट हुआ क्या समझिए, ट्रिगर इज नॉट पॉपुलर टुडे. क्यों? ट्रिगर एक्टिवेट ही नहीं हुए. लोगों ने कहे थे कि 15% के बाद में मेरा ट्रिगर करके हमारा पैसा वापस इक्विटी से डेट में ला दीजिएगा. अच्छा, ट्रिगर बढ़ा 15%, पैसे डेट में आ गए और बाजार बढ़ के चली गई ऊपर, आपके पैसे डेट में रह गए. तो लोगों ने इतनी गालियां दी फंड हाउसेस को कि तुमने मेरा पैसा स्विच क्यों करवा दिया. तो उसने कहा कि आपने ट्रिगर दिया था 15%. भाई बाजार में डायरेक्शन सीधे हो जाएंगे या वोलेटिलिटी होगी, दिस नोबडी नोस. तो ट्रिगर में इतना बड़ा तकलीफ. आई नो कपल ऑफ इन्वेस्टर्स जिसने बड़े पैसे 3 करोड़ रुपया, मेरे लिए तो इट्स अ बिग अमाउंट, दीपक सर के लिए छोटा अमाउंट है. तो
यस सर,
अभी सुन नहीं रहे हैं इसलिए. तो क्या है कि वो 3 करोड़ रुपए लगाए थे, उसने कहा कि 15% आ गए तो लॉटरी निकल गई. बट ही डिडंट अंडरस्टैंड कि 3 करोड़ का 15% एक साल में हासिल करना है कि 20 साल लगातार CAGR हासिल करना है. सो आफ्टर 1 ईयर इटसेल्फ बिकम 15% रिटर्न, और पूरा पैसा स्विच होकर डेट में आ गया और मार्केट बिकेम डबल फ्रॉम देयर. उनके पैसे डेट में रह गए. तो ट्रिगर इज वेरी डाइसी. ट्रिगर को यूज करने का मतलब यह हुआ कि आप बेसिकली इनडायरेक्टली यू आर सेइंग आई एम टाइमिंग द मार्केट.
एग्जैक्टली, सही बोल रहे हो.
तो उससे ज्यादा बढ़िया ये है कि यू टाइम नॉट टाइम द मार्केट, यू टारगेट एन अमाउंट कि हमको 2 करोड़ रुपया मिल गया, मैं निकल जाऊं. इनफैक्ट समबडी आस्क्ड मी दिस क्वेश्चन इन सिलीगुड़ी कपल ऑफ ईयर बैक कि साहब म्यूचुअल फंड का रिटर्न तो फिक्स्ड है नहीं. अभी फिक्स्ड नहीं, आपने प्लानिंग करवा दी कि प्रत्येक के लिए 1 करोड़ चाहिए, और उस वक्त में 1 करोड़ नहीं हुआ तो क्या करेंगे? विड्रॉ करना कब है, इसको बता तो दीजिए. तो देखिए रिटर्न फिक्स्ड नहीं है. और मैं ये बोलूं 25 साल में पैसे आ जाएंगे, 1 करोड़ बन जाएंगे, मैं ये बोलता हूं, तो आपके लिए यही समझना है कि 25 साल या 1 करोड़, व्हिचएवर इज अर्लियर, ये किस्मत है. यहाँ पे रिटर्न यदि 15% आपके हो गए तो 20 साल में ही हो जाएंगे 1 करोड़, और रिटर्न 10% रह गया तो 25 साल में 90 लाख मिला, किस्मत को 90 लाख मिला. ये प्लानिंग,
वही है, इन्वेस्टमेंट कर अपने लोग सो नहीं सकते, अपने को ट्रैक रखना पड़ेगा.
पीरियोडिक इन्वेस्टमेंट हो और पीरियोडिक इसका ये सुपरविजन.
How much will one coin? How much will one coin cost?
दीपक सर, आपका आप म्यूट में जाना चाहिए. वी आर हियरिंग बैकग्राउंड नॉइस सर. शोभा जी का आवाज सुन रहा है.
दीपक सर है ही नहीं मेरे ख्याल से.
हाँ, आई थिंक दीपक सर.
तो ये था और लेट्स सी.
दीपक सर को किसी कॉइन परचेस कर रहे हैं अभी, इसलिए
वो बिटकॉइन को बेच रहे हैं, वो बिटकॉइन बेच रहे हैं.
I'm putting in this कैसे भी सही है.
बिटकॉइन सोल्ड.
बिटकॉइन सोल्ड.
सर 1995-96 में हमारी ड्यूटी लगी थी सर लुधियाना स्टॉक एक्सचेंज में ट्रेडिंग कर्व में ट्रेड कोट करने के लिए. तो वहां पे कोई किसी का सुनता नहीं था. प्राइस गिर रही है, प्राइस बढ़ रही है, बस इतना ही होता था. तो बिटकॉइन परचेज सेल में ये हो रहा है अभी.
बिटकॉइन तो हमारा, आई मीन माइन इंडिविजुअल दिस वन, मेरे तो पल्ले ही नहीं पड़ा सर आज तक.
नहीं, लेकिन मेरे को एक चीज अच्छा लगा, सनत सर तो शायद निकल गए थे उस दिन, शायद ज्वाइन भी नहीं किए थे. उन्होंने बड़े आई शायद चिन्मय सर थे ना, इफ आई एम नॉट मिस्टेकन.
लास्ट वन वाज चिन्मय सर. उन्होंने बहुत अच्छी तरह से, मतलब समझाने का तरीका और जो चीजें बहुत अच्छी तरह से समझाई.
और इतना लुक्रेटिव बना दिया था कि यार कि एक बार बिटकॉइन तो करना ही चाहिए। अब वो दूसरी बात है कि ठीक है, उनका काफी सालों का एक्सपीरियंस था, तो उनको वो उस लेवल में काम कर रहे थे, हम लोग हैं नौसिखिए, वी आर नोविस, तो वो थोड़ी दूसरी बात हो जाती है, लेकिन उन्होंने समझाया बहुत अच्छे तरीके से।
हाँ सर, आई लिसन टू दैट रिकॉर्डिंग आफ्टर आई कुड नॉट अटेंड लास्ट शनिवार, बट उनका मैंने वो रिकॉर्डिंग देखा यूट्यूब, वेरी वेरी इंफॉर्मेटिव, वेरी नाइसली डन, दैट वाज वेरी नाइसली डन।
सनत बॉस, अगर कभी टाइम मिले, अगर कुछ नहीं होना तो वो वाला एक बार सुनना, मतलब काफी अच्छा लगेगा, इंफॉर्मेटिव था।
वो बहुत ज्यादा 2 आवर्स का सेशन है सर, 2 आवर्स में वो कवर नहीं किया, फर्स्ट 1 आवर और 1 आवर 10 मिनट्स में यू विल गेट व्हाटएवर ही वांट्स टू से। आई मीन ही हैज कवर्ड इट वेरी वेल।
हमने सुना था उस दिन, हमने करीबन 1 घंटे सुने थे हम। एक जगह पे डिसएग्रीमेंट हुआ तो हम निकल गए थे एक्चुअली, जब उन्होंने ये कहा कि वी कैन हेज।
उसकी बात नहीं कर रहा है, नहीं उसकी बात नहीं कर रहा है, उसके बाद वाले सेशन में
चिन्मय सर बोले थे कि वी कैन हेज द पोर्टफोलियो। सी, हेजिंग इन्वॉल्व कॉस्ट। दुनिया में हेजिंग कहीं भी बिना कॉस्ट का नहीं होता है, इन्हें डेरिवेटिव से लेके कहीं पे भी आप करें। फंड मैनेजर इन इंडिया आर अलाउड टू डू आर्बिट्राज एंड हेजिंग, बट नोबडी डज दिस। आर्बिट्राज तो करते हैं जहां मिलता है मौका, देवे फंड आल्सो, बट हेजिंग दे डू नॉट डू। व्हाई? हेजिंग का कॉस्ट है 8 आना 1 रुपया, कौन पे करेगा नैब से निकाल करके 8 आना 1 रुपया? सो हेजिंग इज नॉट अ प्रैक्टिस्ड थिंग इन द पोर्टफोलियो, जबकि इन्वॉल्व ह्यूज कॉस्ट। और यदि आपने 100% पोर्टफोलियो हेज करना चाहा बाय बाइंग पुट एंड ऑल, तब तो पोर्टफोलियो का बंटाधार हो जाता है। नोबडी इज डूइंग दैट प्रैक्टिस। तो जब ये जगह पे आए तो आई हैड अ डिसएग्रीमेंट इन थिंकिंग प्रोसेस, तो मैं निकल गया उस वक्त।
हाँ, हेजिंग तो अगेन आई आल्सो डिड नॉट अंडरस्टैंड हेजिंग वो कैसे करते हैं, मगर व्हाट आई अंडरस्टूड फ्रॉम दैट सेशन सर कि बी सेफ ऑन म्यूचुअल फंड। म्यूचुअल फंड सही है, वो तो वेरी वेरी राइट वर्ड दैट सेंटेंस दे हैव यूज्ड, म्यूचुअल फंड सही है। So stick to that is what I learned from that session sir.
सनत बॉस, मैंने एक और चीज, मतलब जो मैंने ट्रिगर का पूछा था ना, वो ये था कि एडलवाइस क्या कर रहा था, बोला कि तुम लिक्विड फंड में पैसे रख दो, लिक्विड फंड में, और एक ट्रिगर डाल दो कि जब जब मार्केट सपोज 5% गिरा तो मेरा 10% पैसा उठाकर तुम इक्विटी में डाल दो। वैसे 2 ऑप्शन थे, एक 5% था, एक समथिंग वो था। तो वो मेरे को याद है कि मेरा अच्छा पैसा मैंने लिक्विड फंड में रखा था, और मेरे को हर गिरते हुए मार्केट में वो पैसा चला जाता था उधर।
मैं आपको बताता हूँ, 2011 से 2014 मार्केट रिमेन इन रेंज बाउंड। 2011 से 2014 17,000 का रेंज मार्केट 3 साल मेंटेन किए। सारे ट्रिगर, टाइम ट्रिगर, रेट ट्रिगर, ऑल दीज केम इन दीज 3 पीरियड। इसी समय ये ट्रिगर वाले सारे फॉर्म आते हैं। उस वक्त क्या हुई कि जिन लोगों ने 11 में किए ट्रिगर शुरुआत में ही, उनको तो मौका मिला एंट्री करने का। जो 14 में किए, बाजार गिरी ही नहीं, बाजार बढ़ के निकल गई ऊपर की ओर। तो बाजार गिरी ही नहीं तो इन्वेस्टमेंट भी तो नहीं हुआ, तो बाजार निकल के 14 के बाद मोदी जी आए और बाजार निकल के चली गई। तो दिस वाज द प्रॉब्लम। इसलिए ट्रिगर इज नॉट सो पॉपुलर नाउअडेज। देयर इज फीचर इन द ऑल एएमसी स्टिल नाउ, इट्स अ सॉफ्टवेयर ड्रिवन, लेकिन वो कोई प्रमोट नहीं करते, बिकॉज
प्रमोट नहीं करते।
मार्केट निकल गया तो आपकी इन्वेस्टमेंट ही नहीं हुई, या मार्केट बढ़ गया आप विड्रॉ कर लिए सारे पैसे, वहां से फिर बढ़ गई आपकी।
बोलते भी नहीं है, पहले फॉर्म में ऑप्शन था, ऑप्शन भी नहीं है फॉर्म में,
वो ऑप्शन भी नहीं था। तो ऑप्शन, ये बहुत धोखा हुआ बहुत लोगों के साथ में, इसलिए
ट्रू। सर वंडरफुल प्रेजेंटेशन, काफी अच्छा लगा।
हाँ सर, थैंक यू
सर।
with all statistics, numbers and all sir, आप you give backup story for that.
सनत सर मास्टर है, स्टैटिस्टिक्स के मास्टर है।